Hello, everybody. This is Steven again with Cannin.com, back for another technical analysis session. If you're not signed up for our Chronicle, that's our weekly email where we do a deep fundamental and a deep technical dive into a single cannabis and hemp company, definitely go to Cannin.com and sign up. We're learning a lot about the technicals here, but we're forgetting about the fundamentals, and Cannin.com is one of the only places that you can find both. So this week, let's jump over to the pricing chart. We're looking at Cronos Group, CRON, listed on the Nasdaq here in the United States. Has been in the news because they've had a bunch of positive pricing movements. So let's see what we can look at here. You can see the price just in the beginning of October was $5, whereas this week we closed at 7.22 with a couple of big bumps. You'll notice this big E here that happened on this candle previous to these two huge movements. That was their earnings, and you can see that the estimate was to lose a little bit. We came back well above that, 452% higher than estimates. So hence the big bump. You can see if I scroll back, there was another earnings call here where the opposite happened, well below estimates, 500% lower, and you can see what that did to the pricing chart. So sometimes we're ready for all of these fundamentals, we're ready for all the technicals, and a simple earnings call is all it takes to drive the pricing chart. So definitely make sure that these earnings are on your calendar, and if they're not, check out Cannin.com because we do have an investing calendar on there. But you can see what's typically happened. We're looking at the triple moving average here. So the short period is green, the longest period is red, and we had a cross. Here's our golden cross, and it happened coincidentally right when this pricing chart bounced up after the earnings call. And you can see it's well above the 200 period, the 100 period marker now. So definitely in that bullish territory, golden cross on the triple moving average. Below we have the RSI, the relative strength index, and you can see we passed our 70 threshold. We did that on the 6th of November, which is this big candle ticking upwards. So it did it on the day that this candle kind of took off. So a little late to act, right? You can see what happened on the CCI though. It's a little bit more predictive, and this is just the difference in the math. When we crossed positive 100, it actually happened before this big jump. So watch the CCI to be a little bit more responsive, give you those signals a little earlier. And look at the amplitude. It actually got up to 400. If that's not a strong signal on the CCI, you'll never see another one stronger. And then came back below and crossed back below on the 12th, which we closed about $7. So a nice $2 gain there had you just trusted solely the CCI. Typically, we don't trust just one indicator. We would have had confirmation of the cross as well as the RSI a day later, but confirmation to stay in that trade or to get in, and maybe you would have captured the additional 6% gains here on the second candle. So pay attention to earnings calls. You can see how important they are, especially when the industry is driving on a lot of optimism from the recent elections. So it's not going to take a lot, and these stocks are going to really take off. So watch these earning calls, get them on your calendar, predict with the CCI, confirm with the RSI, and happy trading, everybody.